First thing we need to talk about is what exactly is binary option. So what we're looking at right here, this is one of the main binary option platforms that you'll see a lot of people using and kind of talking about. It's called Pocket Option. Pocket Option, binary options, it's a financial / investing instrument that allows traders to basically speculate on the price movement of an asset. So if you see this, I'm on GBP USD, which is the Great British Pound to the US dollar, and I'm on this chart, and you see there's different candles going up and down and stuff like that. If you're familiar with investing, you know what this looks like and what it is. Now, although binary options are part of the online trading world and space, to be honest, it feels more like gambling. And the reason why I say that is because in layman terms, you're basically betting that either it'll be above or below the current price that is currently at when you put in the bet after a certain amount of time has passed, right? And it's called binary options because there's really only two possible outcomes. So you're either gonna get a fixed profit basically, or it's gonna result in a total loss of the investment. So it's really not set up in your favor. So we're definitely going to get into it, but yeah, either you're going to win the bet essentially and you're going to get the money that they said that you won, or you're just going to lose everything completely, right? So here's the two main problems here with this model. So it's really truly not set up for you to be successful. And the first thing is really fixed returns basically. So what I want to show you guys is this. If you look over here, let me change this actually. So you have time right here. This right here represents 1 minute, and you can put, for 1 minute, you can bet $100. So that's what this 100 is. You're betting $100. And I wanted to make this video around this time because you can see the market. This is the perfect time to show you just how unfair it is with the RR ratio and everything. We're gonna get into all of it, but if you look at this, you're putting $100, right? And then the payout is $30. So the payout is only 30%, which is absolutely horrible. So basically you're risking $100 to only make $30. So would you say that that's worth it? Because if you lose, you're literally losing 100 whole dollars. But if you win, you'll get your $100 back, but you're only gonna get $30 as a profit. So me personally, if I'm gonna be risking $100, I want to be risking it to at least double my money. And if I don't double my money, then it is what it is. With this, you're not even doubling your money. And this right here is going to depend on whatever, asset that you're on. So if you go over here, this is cryptocurrencies, or I'm sorry, this is currency pairs. They have what's called the OTC market. And if you notice, the OTC market is at a plus 92%. And the reason why that is so high is because this is basically like a fake market that's not really real. So a lot of people don't really advise to be trading on that market, and that's why the payout is so high, because pretty much anything can happen at any time with that. But if you go to like the real markets, you see that these are considerably lower in payout because these are the actual real markets that they can't control, right? So even if we click on the highest one, which looks like it is OddCat at 78%, right? So we switched to that one. So if you still look over here, you're still putting up $100 to only get $78. To me, that's still not a fair risk to reward ratio, because that means that if you lose, then on the next trade that you put in, you're still not gonna make back all the money that you lost from your previous loss. So that means that you now have to win 2 trades in a row after losing just to recoup your first loss back. So that's not a good risk to reward ratio at all. So that's the first problem with this, is that you have a fixed return. So the payout is basically predetermined, and it doesn't depend on how much the price moves in the predicted direction. You either earn the fixed payout or you lose your whole investment with that. So that's problem number 1. Problema numero dos is this right here, the expiration time. Basically, binary options have a set expiration time, and it can range from minutes to hours to even days. Like honestly, this is 1 minute, 3 minutes, 5 minutes, 30 minutes, 1 hour, 4 hours. I think some platforms allow you to actually do it for longer than that. But this is the second problem, because you're basically putting an unnecessary time restriction on the trade. And it's actually pretty crazy. Honestly, any trader, like any experienced trader or anybody who knows anything about trading will honestly tell you that this is pretty mediocre, because you're essentially handicapping your trade for no reason when you do that. Because anyone who knows anything about market price action, right, knows that sometimes it takes more time. Sometimes it simply takes more time for that move that you're looking for to actually happen. Say that we get like right here, and then we think that it's about to go down. So say we put in our trade like right here, it starts to do whatever it's going to do. The problem here is that, yeah, it's definitely about to go down, but it didn't go down within that 5 minutes. Essentially, you see it kind of like spiked up a little bit more, then it went down. So if you were just regularly trading like any normal person would trade, like futures or something like that, or, you know, just regular trading or whatever, that wouldn't really mean nothing, because what you would do is you would put a stop loss and then you would put a take profit, and take profit probably would have taken profit like maybe right here, or even all the way down here or something like that. So you would have been perfectly fine. But the thing is that you just had to wait. You know, you just might have had to wait. You could use this example too. Say you put in the trade like right here. Basically what it did right here, you felt like it was going to do on this. But say you put it in for like 5 minutes or whatever, or say you even put it in for a minute down here. Well, guess what? The candle went back up, and then the next candle opened up right here. So if you just put it in for 1 minute, you would have lost that. If you put it in for 5 minutes, you might have still lost that, depending. But we know that it went down. Like we knew that it was going down, and it did go down. But because of the expiration time, we pretty much like screwed ourselves for no reason. So that is the other issue with binary options, is expiration times. Like there's no need for expiration time. You're honestly just adding more severity and stress and cruciality to all of this for no reason. So the last thing that we're going to get into is we're going to get into the RR ratio. So when people are first starting out trading, this is the first thing that anybody should understand. Honestly, it's what really truly sets profitable traders apart from non-profitable traders. So let's switch over to this tab right here. So this right here is it's trendspider.com. It's a free trading risk reward calculator, and my face looks super bright now. But the general rule of thumb for your RR ratio, R&R ratio, right? You want it to at least be 2, no less than 2. So basically what the ratio is it's basically your stop loss. It's your stop loss and it's your take profit. Let me explain this a little bit. Let's go to TradingView. This is one of my trading indicators that I've been working on. If you're looking at this chart, this right here is XRP. Let's go somewhere else. Let's look at Bitcoin, right? And this is tradingview.com. This is where you can see all your chart data and stuff like that. So let's look at this general area right here. So if you look at these things right here, this is short position, this is long position. Let's say that we're looking for long positions, which means that we're looking for the price to go up. So let's say that we put that in like right in this area, because it looks like it's about to go up. So let's say like on this candle right here, we put that right here. This little tool right here, it gives you a good idea of how much you could potentially lose and how much you could potentially win. So right now it's at a 125% for win, and it's at a 1.25% for lose. So that means that your risk to reward ratio is literally 1. So the thing is with this is that you have to basically win more than what you lose in order for this to be profitable, because it's a 1-to-1 even ratio. When I first started out, and when a lot of traders first start out, they end up kind of having a ratio like this without even realizing it. And it's not until you actually realize the concept and do the math and figure out how important the R&R ratio is. Only then can you really become profitable and understand why you're not making any money, right? But yeah, this is a 1-to-1 ratio. So for example, let's go back here. You put $100 on here. If we do a 1-to-1 ratio, let's put that on here. This website will basically tell us. That means that we put $100 on the trade and we have a 1-to-1 R&R ratio. So that means that either we're gonna gain $10 or we're gonna lose $10. Let's say that we're looking for, I guess, a 10% gain with leverage. So let's say that let's say you're trading futures, you put a ×10 ratio on a dollar trade or whatever. So that'd be like $10. Or it doesn't even have to be $10. It can honestly just be 1%, like $1, right? So literally you can either lose $1 or you could either lose $1 or you could either gain $1. So that's literally a 1-to-1 ratio. So if you look right here, it says required win rate for consistent profitability right here. So that means that you literally have to win 65% of the time or higher to actually be profitable with a 1-to-1 win ratio, or R&R ratio of 1. The problem is you might think, okay, well, 65%, that seems good, but it's not very realistic, because most traders, especially beginner traders, and most traders in general, they can't keep a consistent 65% win percentage. The only way that you can do that is if you're pretty experienced, which usually just comes with years of knowledge and practice, or if you just have a really good indicator that's really good. And maybe you might have the latter. You might be able to find a good indicator, because some of these indicators are very good nowadays, especially with AI and stuff, creating these indicators. So maybe you can do that, but it's still just not smart, because that means that if you win a trade, okay, cool, you got $1, but say the next trade you lose, now you're back to square one. You literally have to keep trading and you have to keep winning. And basically what it does is it drastically slows down your profits, and you have to take more trades, and it's just not good, right? So if we switch this to 2, if you notice, now we're gaining a profit of $2 with only a potential loss of $1. So if you notice, look at this, your required win rate gets pretty much cut in half. This is when you start seeing consistent profits and you start becoming profitable as a trader, because basically what this is telling you is that you can actually afford to lose twice in a row and still not be in the negative. So that basically gives you way more wiggle room to not always be so accurate. So if you literally lose your next trade, you're still going to be in profit with $1. And then say after that you win again, that means now you're going to have $103. So this right here is the key to trading. Being able to control your risk to reward ratio. So back to this right here. If we look at this, we put the trade in right here. It opened on this candle. It looks like it went up and down a little bit, but it closed up here. And then on the next candle, if you had a 1 ratio, you would have got it, right? But if you look at this, you see how this went all the way down. Technically, it went all the way down into your stop loss. So you almost took that L, but let's switch the ratio to a 2 ratio, right? So let's see. Okay, see, now if you look right here, the risk to reward ratio is 2. So it does require you to stay in the trade a little bit more, but it's good because basically you're making more money. So if you look at the stop loss right here, if you look at the stop, if you were to lose, you would lose 1,120. But if you come up here and you win, look, you're winning 2,243, and then your win percentage is 2.50%. Your lose percentage is 1.25%. So even if you lose another trade, it's only going to be 1,120. So because of the fact that you won so much more on that other trade, you're still going to have like 1,100 and something in profit still. And then what you can do is you can just, kind of do that. You can trade and do that. So going back to pocket option, you can see that the payout is only 78%. So that means that you're risking $100 to potentially make $78, right? Right? So there's really just so much more unnecessary risk trading with this risk to reward ratio. So that's how this is essentially set up to steal your money, because they know this. Like, the platforms, they know this, and they know that the odds are literally stacked against you. Not only is risk reward ratio, but expiration times. The fixed expiration times are diabolical because they only give you so much time for the potential move to even happen. And if you look at this candle, you just saw this candle was kind of moving kind of crazy. Like, it was just up there, then it went down there. So it can happen, you know? So this is pretty much just an explanation of why this is so risky. There's one last thing I want to look at. This is like another example that I wrote down. So if you have $1,000 account total and your risk to reward ratio is 2, this is if you're regularly trading. If you're trading like futures or something. Let's say you put in 4 different trades, right? So the first trade, let's say that if you win with the times 10 leverage, most people, they say it's good to only risk like 2% of your account on each trade or something like that. So 2% of the account would pretty much be like $20 or something like that. We're just gonna say that we're doing it with leverage, right? Or we could say that we're doing 1%. We can say that we're doing like 1% or with leverage or whatever. Let's just say that total, right? Total, you're trading with $100, and regardless of whether or not you're doing leverage or whatever, let's say that you're looking to make $20. Because you have your R ratio of 2, that means that you could potentially lose $10. So this is okay, because if you lose, then you'll still be left with $90. So this is not binary options where if you put up the whole $100 and it's gone. That's a bet. That's gambling, if you ask me. But this is trading. This is actual real trading. So if you come to TradingView, you know, you can expect to see your numbers looking like this. So if you lose, the max that you can lose if you set your stop loss here, because you can't do this with pocket option. You can't set stop losses with pocket option. Either you win or you lose. But this is the beauty of actually trading normally, is you can set stop losses. So trading is all about risk management, honestly. And people say that, but they say it because it's true. I mean, it's all about risk management. So you can either make $20 and be up by be up by $20 for a total of 120, or you can lose $10 and still be left with $90, which is completely fine. So let's say that you do 4 different trades. If you win all 4 of these trades, you'll be up by $80 total. Amazing. But let's say that you lose 1 trade, right? So 120 plus 120, that's 240, plus another 120, that's 360. So let's say we lost this trade though, so we're only going to do minus 10. So literally you're still in profit. This is $400 that you're taking out of the $1,000. So even though you lost this, right, you're still going to be in profit by, this is 360, so you add 90 onto that, your total profit is still going to be 450, which is amazing. You know, and now you're at 450. You spread it across 3 different trades, or 4 different trades, and you lost 1 trade, but you're literally still in profit after losing 1 trade. Let's say you lost 2 trades, right? You would think that, okay, I won 2, I lost 2, it should break even, right? False. This is what a lot of people think when they first start. And if you have that 1 R&R ratio, it would break even pretty much. But if you, with the 2 R&R ratio, it's not going to break even. So you're going to make 120 back. You're going to make another 120. So that's 240. You're going to lose 10. So you're only going to get 90 back. And then you're going to lose 10. So you're only going to get 90 back as well. In total, this is going to be 120, 240, 330, and then 420. So you still made a profit. So you're still, even though you lost 2 trades and won 2 trades, you're still in the positive. You still made money. You still made $20, so isn't that cool? Like, that's the power of good risk management and proper risk control, right? Now, the problem is like, let's say you put $100 on pocket option and you won 2 of these trades. So let's see, pocket option, you won, and the payout on this is 58. It's didn't change. So if you win back 158. If you lose everything. So with pocket option, let's type this right here. If we look at this, you can see that with pocket option, we're not going to get anything. So we're going to lose everything, right? We can potentially make 150, but everything else we're going to lose. So you can see that if we lost 2 trades and if we won 2 trades, if we add 158 and 158 together, that comes out to 316. And because of the fact that we're not getting anything else back, that means that out of our $400 that we put up $400. You see where I'm, going with this? You put up $400, you're only getting 316 back. So that means that you lost a total of $84. You didn't even break even, you're negative. So that's the problem with binary options. You can literally win 2 trades and lose 2 trades and you're not even breaking even. That's worse than a 1 ratio. I don't know what that is. Like that's like negative 0.5 ratio or something. I don't know. But yeah, as you can see, that's where pocket option and binary options start getting dangerous. You can win 2 trades and lose 2 trades and still be down by $84. So it's just not worth it. It's simply not worth it. It's not set up for you to be able to make money in a fair way. And some people might say, well, there's martingale and all that stuff. And basically martingale is like, okay, if you lose 2 of these trades, you can turn around and basically put double the amount of money on it and make your profit back. But guess what? You only made back $316. So now, in order to make back the $100 that you lost at a 1.5 ratio, or at a whatever this payout is, ratio or whatever, basically you would need to make $100 in profit. So how much would we have to put on the next trade? At least like 180, like at least 180 on the next 2 trades. So that's another 360. So, that's just the amount of risk is just astronomical at that point. So it's just not smart. It's not a smart move. Let's say that you're just doing regular trading like this. Let's say that you lose 3 trades, right? And if you have a good strategy and you know what you're doing, most of the time that's not going to happen. But let's just say that you're super unlucky. The market is going crazy. You lose 3 trades in a row or something like that. Even if you lose 3 trades in a row, you're still going to get 270 plus the 120. So literally you're still going to get $390 back out of your 400 that you put up for all 4 of these trades. You're only gonna lose $10 because you lost 1 trade. So, or I'm sorry, you only won 1 trade. So that means that you only lost $10. You see what I'm saying? So you can see how much more smarter it is to trade this way versus this way. This isn't even trading. This is betting. This is gambling, in my opinion. And it might, I know it, like, honestly, you see these numbers and sometimes you can get cash symbols on your eyes, and it's like, for some people they feel like it's just easier, it's quicker. For some people, some people like binary options because they feel like, it's just more simpler. Either you're gonna win or you're gonna lose. You don't have to worry about plotting all this stuff and getting these ratios right and the amount of and hey, I get it, but with that, level of convenience, you're taking on a level of risk that's just not, it's not like balanced, if you ask me. It's not even, it's really just not set up for you to win. You know, I get it, simple to understand and stuff, and it allows you to also trade on shorter time frames, so you don't have to stay in the trades for too long. You can get in, get out, make your money for the day or whatever. I get it, you know, but ultimately it's just not set up for it to be fair to you. And you know, I see so many people talking about pocket option and stuff. I'm American, and this type of stuff like pocket option and stuff, a lot of these, you know, binary option platforms are actually unregulated, so that can actually lead to potential fraud and unfair practices and stuff. So I know like in the States and stuff, a lot of these you can't even like really use like that. So if you're gonna do this, I just can't recommend anybody do this type of trading, honestly. But yeah, I mean, it's not even really trading. Like I said, it's betting, because there's no actual ownership over the asset, or the way that I said that, asset. There's really no type of ownership or anything. You're not actually trading, you know, you're just betting. You're not receiving anything. The definition of a trade is you swapping something that you have for something else, and that's not what's happening. You're just putting in a bet and saying that, hey, I think this is going to happen, and if it happens, I win this much. If I don't, I lose that much. So that's not a trade, that's a bet. So in my opinion, it's really just another form of gambling with the mask of trading. It's just too much risk. There's no need for the amount of risk that this has. Like, it's just crazy. But yeah, a lot of times it's associated with like scams. If you see people who are promoting this type of stuff, I'm not necessarily saying that they're working with the company that's doing it. I'm not saying that they are scammers themselves. They might be, I don't know, but just be very leery about it, because it's damn near impossible for you to be profitable with binary options. So anyways, with that, guys, this video has been long enough. I'm gonna leave you guys with that. I hope you guys enjoy this video, got some type of value out of this video. I am gonna be trying to post more things on this channel. Something that I do like to do is I am a futures trade. I like trading futures. I like trading cryptocurrency as well, because I just love the movement and volatility of it. But I also like to code, so I have a little bit of knowledge of PineScript on here. I know how to code in C#, Python, and a little bit of Java. So I love making programs and stuff like that. That's stuff that I've always enjoyed doing. So I got a couple of scripts that I've made. If you notice, you see QTM. That's me. That's Quantum. If you guys know my other channel's name is QTM Gaming, and that was where I put my Atlas Earth videos and stuff on, which was technically a game that you can make money from. So, you know, if you don't know me, I know this is my first video, but I like to game. I'm a nerd, and I like to find different ways to make money. So yeah, I have two channels. This one's gonna be the money channel. So if you got any type of value out of this video, definitely give me a sub, give me a like if you want, only if you want to. It'd be very much appreciated. Feel free to leave a comment, and yeah, definitely looking forward to the next few things that I will be talking about on this channel. I'm really going to be getting into like actual futures trading, and I might be doing like some live trades, or, you know, just recording some of the trades that I'm doing. I've been thinking about doing like the challenges that people do, where they basically flip accounts. So like you flip a $100 account to $1,000 account. I was thinking about even doing a $1 account. But anyways, yeah, I mean, there's a couple of things that I want to do, show you guys the indicators that I've been working on that are made by me. I have like 3 main ones: AIO, which needs a lot of work, Flipside, and Climate. I can give you guys like a sneak peek. This right here is Flipside. It works pretty decently. This right here, basically, it gives you like entry points. So if you look at this right here, this is an entry point of it going up. This right here is the stop loss line. So you can see it went up and it went into profit. Then there was another one that was going down. That one also closed in profit as well. It's a pretty decent indicator. It's accurate. I want to say anywhere from like 70 to 80% of the time, depending on the actual asset. It works really well on Bitcoin, but yeah, it doesn't always work well on everything else all the time, but a lot of times it works pretty good, like with Bitcoin, I noticed. But anyways, yeah, that's Flipside. And then this one right here is another one that's pretty cool. It's called Climate, and the rainbow candles look so pretty. But yeah, it basically gives you like different entry points based off of, you know, the candles being oversold, which is too cold and they need to warm back up, or being overbought, which means they're too hot, they need to go back down. So anyways, yeah, Climate, Flipside, working on it. I have another one that I'm working on called the AIO indicator. Actually, I think it's this version of it. Working on it. This one is not the best. I'm still kind of working out the kind of kinks on this one, but yeah, just a little sneak peek of what's to come. But anyways, this video is way too long. So if you guys did enjoy this video, definitely stick around. I definitely got some more stuff that I'm going to be talking about. So yeah, appreciate it. See you guys in the next one. Peace out.